Hello, everyone. Artificial intelligence is no longer just a buzzword floating around Silicon Valley or tech conferences. It has become a powerful force that is actively reshaping national security, defense, and even the investment landscape. In fact, some of the most intriguing opportunities for investors right now are found at the intersection of advanced AI software and government defense contracts. Within this unique space, two companies stand out as leaders charting very different paths. Bigbear.AI, ticker symbol BBAI, and Palantir Technologies, ticker symbol PLTR. Both firms are deeply involved in building AI-driven solutions for defense, intelligence, and critical infrastructure. They each aim to help governments and organizations make smarter, faster, and more secure decisions. Yet, despite being in the same broad category, the two companies differ massively in terms of scale, financial strength, business model, and execution strategy. Understanding these differences is critical for anyone trying to figure out which stock may deliver stronger returns going forward. Let's start with the basics. Bigbear.AI is carving out a reputation as an agile, defense-oriented AI player. Its offerings center on biometric identification, supply chain resilience, and autonomous command systems. Palantir, on the other hand, has evolved into a giant in the AI world, particularly through its artificial intelligence platform, AIP, which is gaining traction not only with governments, but also with big commercial enterprises. From a stock performance perspective, both companies have given investors plenty of reasons to pay attention in 2025. Bigbear.AI's share price has skyrocketed, up more than 52% in just the last 3 months, and nearly 80% year-to-date. Palantir's rise has been just as remarkable, climbing 27% over 3 months and an eye-popping 140% year-to-date. These kinds of moves don't happen randomly. They reflect surging enthusiasm for the AI defense narrative. However, they also highlight how different the risk and reward profiles are for each company. For context, the broader technology sector is up only around 23% this year, meaning both BBAI and PLTR are vastly outperforming the market. So the natural question becomes, which of these two companies is the better investment right now? To answer that, we need to dig into the fundamentals, starting with Bigbear.AI. Bigbear.AI's story is closely tied to government spending and new legislation. A major turning point has been the passage of the so-called One Big Beautiful Bill, OB3, which provides more than $300 billion in supplemental funding for the Department of Defense and the Department of Homeland Security. A large chunk of this funding is earmarked for technologies that Bigbear.AI directly specializes in. Things like border security systems, biometric identity verification, and defense autonomy. This creates a huge opportunity for the company's key products, including Conductor OS, an autonomous command and control system, Shipyard AI, focused on supply chain and shipbuilding solutions, and Veriscan, a biometric identification tool. Financially, Bigbear.AI is in a stronger position than it has been in years. The company now holds nearly $391 million in cash and, for the first time ever, boasts a positive net cash position, meaning it has more cash than debt. This gives management significant flexibility to invest in growth, explore mergers and acquisitions, and compete aggressively for contracts. Partnerships in regions like the UAE and Panama show that the company isn't limiting itself to the U.S. It's starting to think globally. But the picture isn't entirely rosy. Bigbear.AI's latest quarterly results reveal ongoing challenges. In the second quarter of 2025, revenue actually dropped 18% year-over-year, landing at just $32.5 million. Disruptions in U.S. Army contracts were a major factor. At the same time, adjusted EBITDA losses widened to $8.5 million, and the company reported a staggering net loss of $228.6 million, driven largely by goodwill impairment and derivative revaluation. Because of this, management has pulled back its EBITDA guidance for the year and now expects annual revenue in the range of $125 to $140 million, a cautious outlook that reflects execution risks. In short, Bigbear.AI is still a small player compared to Palantir, and it remains unprofitable. Its growth depends heavily on landing big government contracts, which creates volatility. If the company executes well and aligns its offerings with OB3 funding priorities, the upside could be substantial. But if it stumbles on contract wins or execution, the downside risk is just as real. The recent surge in its share price shows investor optimism, but volatility will likely continue to define the stock. Now let's turn to Palantir. Unlike Bigbear.AI, Palantir has already crossed the threshold into being a large-scale global AI powerhouse. In the second quarter of 2025, the company surpassed $1 billion in quarterly revenue for the first time ever. That represents a 48% year-over-year increase, an incredible growth rate for a company of its size. Even more impressive, Palantir achieved adjusted operating margins of 46%, showing that it's not just growing fast, but also doing so profitably. Both its government and commercial businesses are thriving. U.S. commercial revenue nearly doubled, up 93% year-over-year, while U.S. government revenue surged 53%. The company also secured one of the largest defense technology contracts ever seen, a 10-year agreement with the U.S. Army worth up to $10 billion. This deal consolidates dozens of smaller agreements into one unified partnership, essentially cementing Palantir as the go-to AI partner for the Army. Contract momentum continues to be a major differentiator for Palantir. In the same quarter, it closed 157 deals worth more than $1 million each, with 42 of those above $10 million. The total value of these bookings hit $2.3 billion, up a staggering 140% year-over-year. The company now has $7.1 billion in remaining deal value, giving it visibility and stability that Bigbear.AI simply can't match. On top of revenue growth, Palantir is delivering profitability at scale. The company generated $569 million in adjusted free cash flow during the quarter, with margins of 57%. It ended the period with a massive $6 billion cash reserve. Even more impressive, Palantir has now recorded 8 straight quarters of GAAP profitability, a rare achievement for a high-growth software company. Management has also raised full-year revenue guidance to just over $4.14 billion, representing 45% annual growth, while projecting nearly $2 billion in operating income. While Bigbear.AI is betting on future growth from OB3 and international expansion, Palantir is already firmly entrenched with the U.S. government and is rapidly scaling in commercial markets. Its AI platform, AIP, is being adopted by high-profile clients like Citibank, Fannie Mae, and Lear, who report transformative benefits from using the technology. Palantir's business model, built around a lean sales force, strong customer evangelism, and quick deployment, has allowed it to achieve Rule of 40 scores above 90, a rare balance of growth and profitability that investors prize. Of course, valuation is where things get tricky. Bigbear.AI currently trades at a forward price-to-sales ratio of around 18.6 times, far higher than its historical median of just 2 times, and also above the broader technology sector's 7.1 times. This inflated multiple suggests that investors are already pricing in significant execution improvements. Palantir's valuation is even steeper, trading at nearly 84 times forward sales. With its stock already up 140% this year, Palantir is clearly priced for perfection, and any slowdown in growth could trigger volatility. So where does that leave investors? Bigbear.AI offers higher risk, but also potentially higher reward if it successfully capitalizes on new defense funding and expands internationally. Palantir, by contrast, is already executing at a world-class level, with strong growth, consistent profitability, and unmatched contract visibility. The trade-off is valuation. Palantir carries a premium price tag, while Bigbear.AI is cheaper in absolute terms, but riskier due to execution challenges. In the end, both companies represent different ways to play the rise of AI in defense and security. Bigbear.AI is the speculative bet, small, volatile, but full of potential if things break right. Palantir is the established leader, more expensive, but also more proven. Your choice as an investor depends on your appetite for risk and your time horizon. It is not financial advice.